next top way of finding undervalued properties and anytime in any city, and this happens literally anywhere, every corner of planet Earth, anywhere where anybody finances real estate, you're going to find foreclosures and power of sales. Now, in this category, we also sort of talk about bankruptcies, which most commercial properties, large scale development properties, they'll go into something called receivership. So it's a little bit different. And they'll go and file bankruptcy, but most of the time it is because of a foreclosure issue or power of sale issue pertaining to financing or the mortgages. So how we look at now, if you're not a realtor or you don't have a realtor, you can easily find one, and you will most likely want to give them this information, because I can tell you 98 out of 100 times, you will not find a realtor who knows how to do this properly in the system that they're using. So every city, every municipality has their own MLS system for realtors. Unfortunately, there's not one main hub where you can sort of systemize this, but Zillow is not bad, but they don't give you as many search functions as we like. Realtor.com is not too bad. Realtor.ca is one we use. Again, it's okay, but not as good as the power of the realtors MLS. So if you don't have a realtor, find one. They're more than happy to send this to you for free. There's no cost to you. And what you're going to tell them is, say, search these terms on your MLS. So the seller's name is going to contain bank, mortgage, or CMHC, or foreclosure, or power of sale, or receiver. So receivers, that tends to what happens in bankruptcies. And you'll see here, this search, just today alone, there's 1,374 just in the city of Toronto of power of sales and foreclosures. That's a high number. Normally it's not that high, but because of the circumstances we're in right now with the pandemic, you're going to start seeing more and more and more come online. In hot markets, you tend not to see this, because when people get in a bad situation, they tend to sell their homes fairly quickly. Market's been a little soft and slow, and people get into arrears and they don't know what to do. And guess what happens? The banks come in and they foreclose, or they do a power of sale. So power of sale, the difference between the two real quick is power of sale. We go more in depth into this, into the full masterclass training. But when you get into working with banks, how to find these deals, we get into all that training, how to do the offer, how to structure the offer properly. That's in the masterclass. But today, the power of sale is, well, a bank or a lender will force the sale, but they don't necessarily own the property. They just force the owner to sell it so that they can liquidate and get the money back for the mortgage that's owed. Now, when it comes to a foreclosure, the difference is the lender takes ownership of the actual property, and then they go and sell it on like their own company books, just saying we're selling our own property. So that's the main difference between the two. Foreclosures they don't happen often in Canada. It's more something that happens in the US quite frequently. In Canada, mostly it's power of sales, but when it gets down to bankruptcies and taking possession of properties, there's a really good resource. These guys called the Insolvency Insider. You can basically look up any bankruptcy trustee on Google in your neighborhood, in your local area. There's always one receiver who is going to be in that local area all over the world. So these are all assets. These are all real assets. And I'm just trying to see I just want to scroll and see how many there actually are. There's lots of them, actually, more than I thought. So this is actually a big project here. So what's owed is $163 million on this piece of land. They're owed to the bank $214 million. Now, this was filed a couple of years ago, but just sort of coming to the receivers now. Now, this may not be for you yet, but just so you're aware, this project, once built out, is probably worth about $1 billion for this part of the city and for what they're actually building there. So that's $800 million of profit if you can get this property, if you figure that out. But there's also lower end stuff, right? This is like $5.8 million owed, 9.3. And this is already a 69 unit townhome project ready to go, and the builder defaulted on the loan and they're going through bankruptcy. And you can, a lot of the time, get these for very low valuations, not quite as low as tax sales. And typically the receivers in bankruptcies, it's big development projects. When you're looking for let me see, just power of sales, and you want like lower price points. There's 1,300. Unfortunately, our system caps out at 200. So you'd have to get through all this kind of stuff first. Where are these here? So what we do is we go through these and we say, look, this is a power of sale, or it's a bankruptcy, or it's a trustee, and we'll approach the bank with a low offer and just go from there. So out of 1,300, see, here's a Mortgage Capital Inc. So this is a private lender who lent money to somebody. It was already sold, actually. But it's sold for undervalued, 408. And you're going to see, yeah, so this is a power of sale, aggressively priced, no doubt. These condos, this is a, let me see, what is it, 1,000 square foot condo. This would typically sell in Toronto for about $800,000. So they got for about half the value of what it normally is on a good day. So that's power of sales. That's what you need to look for.